Welcome back to the deep dive. Today we are focusing all of our attention on NVIDIA Corporation, ticker NVDA.
The company right at the heart of the AI revolution.
Exactly. And while the business results have been, nothing short of historic, the stock price itself has recently shown some frustrating volatility.
A real disconnect.
It is. So we've stacked up the latest Q3 2026 earnings, the analyst reports, and all the future guidance to try and figure out what's really going on. Why is there this sharp disconnect between flawless execution and, the short-term stock chart?
And before we get into any of the numbers, we have to be crystal clear on one thing.
Go ahead.
This analysis it's for informational and educational purposes only. Everything we're talking about is based on publicly available data.
We are not offering financial advice.
Not at all. You, the listener, you must always do your own extensive research, your own due diligence, before making any decisions with your capital.
Absolutely. We're here to arm you with knowledge, not recommendations. Okay, so let's unpack this.
Let's do it.
For immediate context, we're looking at a behemoth. A trailing 12-month market cap of around, $4.36 trillion.
Just a staggering number.
It is. And yet, despite being the defining company of the decade, we just saw the stock close at $178.88. That was a dip of almost 1% in a single day.
And the range is huge.
It's massive. The 52-week range swings from about $86 all the way up to $212. So you have this overwhelming fundamental strength.
But these clear short-term jitters.
Yeah.
And that tension, I think, really sets the stage for our entire conversation.
That tension, market uncertainty versus operational certainty, that is the core story here.
It is. Because if you just look at the Q3 2026 performance alone, the company delivered results that just crushed expectations across the board.
So tell us the scale of that crush.
Record revenue. It came in at $57 billion.
57.
$57 billion. That's a stunning 62% increase year over year and a 22% sequential jump from just Q2.
And there's one clear driver for that hypergrowth.
One very clear driver.
Yeah.
The data center segment.
That's where all the action is. Let's talk numbers there.
That segment alone soared to $51.2 billion. That's 66% growth from a year ago.
Wow.
To put that in perspective for you, the data center is now generating almost 90% of the company's entire revenue.
And it's not just the GPUs.
No, the full stack is selling. We also saw networking revenue jump 162% year over year to $8.2 billion.
What's truly remarkable to me, though, isn't just the top-line growth. It's the efficiency, the operational efficiency during this frantic expansion.
You're talking about the margins.
The margin story, yes.
That's right. So despite all the costs of scaling up manufacturing, securing the supply chain, their non-GAAP gross margin hit 73.6%.
Which was above their own guidance.
It actually exceeded the high end of their guidance.
Mm-hmm.
And for anyone listening who doesn't track this daily non-GAAP margin, it just strips out certain expenses like stock-based comp to give you a cleaner view of profitability.
And hitting almost 74% shows?
Oh, what?
It shows supreme pricing power and just incredible execution efficiency.
And that level of execution, it carries right into the forecasts, which are, arguably more important for the stock price than past results.
Much more important.
NVIDIA is forecasting Q4 revenue to hit $65 billion, plus or minus 2%.
Which implies another very, very robust 14% sequential jump.
And that jump isn't just riding on last quarter's wave. It's all about the next big thing.
It's all about the future architecture.
Yeah.
Management confirmed this momentum is primarily being propelled by the accelerated adoption of Blackwell.
The new Blackwell architecture.
Right. And specifically, the newest, highest-performing units, the GB300s, are contributing roughly 2/3 of all that Blackwell revenue. So that tells us two things. One, the high-end market is just insatiable. And two, the transition to the new product cycle is happening incredibly fast.
Exactly. And this is where the visibility gets, frankly, staggering. We also got confirmation that they're already aggressively working on the next generation.
You're talking about Rubin.
I am. The sources indicate the upcoming Rubin platform is already on track for a 2026 ramp.
And this isn't just a minor upgrade.
No, not at all. This platform, including the 7-chip Vera Rubin design, is expected to be a substantial leap over Blackwell.
So a lot of our listeners are probably thinking, given this pace, this aggressive cadence, how can management be so confident, so far out?
Because they have visibility. Management gave some stunning long-term guidance, estimating $500 billion.
A half a trillion.
$0.5 trillion in Blackwell and Rubin revenue from the start of this year through the end of calendar 2026.
And that's not just a guess.
No, this isn't a best-case scenario. This visibility is guaranteed. It's locked in by long-term capacity reservation and purchasing agreements with their key customer,
The hyperscalers.
the hyperscalers. They need to lock in supply for their multi-year, multi-billion-dollar AI factory builds. So they're paying for future capacity right now, which gives NVIDIA just unprecedented revenue certainty.
That is a powerful distinction. So we've established the numbers are fantastic, the roadmap is clear. The natural question is, how do they maintain this lead?
Especially with competitors like AMD, Intel, even their own customers building chips.
Right. Which brings us to the famous wide economic moat.
And what's so fascinating here is that the moat, it's not fundamentally about the hardware specs.
Even though the hardware is superb.
The hardware is superb, but that's not the real lock-in. The moat is primarily an intangible asset, the CUDA ecosystem.
So unpack that. Why is CUDA so powerful?
Well, it's been refined for decades. It supports this immense developer community. We're talking millions of engineers, and it powers nearly every major AI framework out there.
So if a company wants to switch,
If you want to switch away from NVIDIA, you don't just swap out a GPU. You have to rewrite years of custom code. You have to retrain your talent, and you'll probably sacrifice performance. That creates just massive switching costs.
it effectively locks in your most valuable customers. I mean, that's the definition of a sticky business model.
And it's why their full stack advantage is so critical. They don't just innovate on the chip, they innovate across the entire system. CPU, GPU, high-speed networking like InfiniBand, and all the software tools.
Which all comes down to one metric.
One critical metric. It drives down the cost per token for their clients.
And for our listeners, explain why cost per token is the ultimate measure here.
Think of it as the unit cost of AI. A token is just a piece of data the AI model processes. Whether you're training a model or running inference, generating text or images, the lower the cost to process that data, the more profitable your AI service is.
And NVIDIA's deep optimization makes them the best choice.
From the chip all the way up to the software, it ensures they offer the best cost per token. It makes them the default choice.
And this is where it gets really interesting, because the narrative is shifting. It's moving from NVIDIA as just a chip seller
to NVIDIA as a partner selling comprehensive AI factories.
Explain that shift.
That shift is, well, it's the strategic genius of the moment. By moving into selling entire integrated systems, these AI factories, NVIDIA embeds itself directly into critical global infrastructure.
And that secures
What?
massive long-term capital expenditure. CapEx commitments. I mean, we are talking about unprecedented scale here. The hyperscalers' aggregated CapEx expectations for 2026 have now increased to roughly $600 billion.
$600 billion. That's not just discretionary spending. That's foundational infrastructure.
It is. And the sources confirm NVIDIA is right there with the biggest names in the AI race.
Like who?
We see strategic partnerships with foundation model builders like OpenAI, Anthropic, and xAI. For example, Anthropic has committed to using Grace Blackwell and the future Vera Rubin systems. And xAI is building something huge, I read.
They're building Colossus 2, which is described as a gigawatt-scale data center project. These are massive long-term contracts.
But it's not just the training phase, right? They also seem to control the inference side, which is the actual delivery of AI services.
Absolutely. The sources highlight that the Dynamo Inference Framework, which is NVIDIA's open-source solution, has been adopted by every major cloud provider.
Every single one.
AWS, Google Cloud, Microsoft Azure, and OCI. All of them. Dynamo lets them run AI inference faster and cheaper. So even when the training boom eventually slows, NVIDIA remains essential for the operational part of AI delivery.
Okay, so we have to shift now to the tension points. If the ecosystem and the earnings are this pristine, why is the stock trading below the consensus targets?
That's the billion, or I guess trillion-dollar question.
The price is around 178. The stated fair value is closer to 196, and the analyst's average target is way up at 270.
Well, the market is fundamentally wrestling with two things, valuation and risk.
The valuation is high.
It's at a premium. The trailing PE is, 43, and the forward PE is around 39. Those numbers scream that massive historic growth is already priced in.
So any little stumble, any perceived risk.
Causes an immediate price contraction. Exactly.
So let's drill down into those major risks. First and foremost, geopolitical risk, especially China.
This is the most direct financial hit that the sources acknowledge. Because of the expanding U.S. trade restrictions, NVIDIA confirmed that data center revenue from China was negligible in Q3,
How negligible?
only about $50 million. But more critically, management stated they are assuming zero data center compute revenue from China in their Q4 guidance.
Zero. That is a direct, tangible hit to their market access. How is the company just absorbing the loss of a major market like that?
They're managing it by redirecting capacity.
Yeah.
The demand from other regions, the Middle East, Europe, domestic hyperscalers,
Yeah.
it remains so strong that it has more than absorbed the volume that would have gone to China.
But the risk remains.
Oh, absolutely. The risk of future controls or more market fragmentation, that remains a major investor concern. And that's what drives the volatility.
Okay, let's talk about the other big fear. The idea that this is all just an AI bubble waiting to pop.
Management addressed this head-on. They countered that this isn't short-term hype. They argue the demand is driven by fundamental durable platform shifts.
And they categorize those shifts.
Right. First, accelerated computing replacing classical data processing. Second, generative AI replacing static software. And third, the coming rise of what they call agentic and physical AI.
Can you just quickly clarify what agentic AI means for us?
Sure, agentic AI involves systems that can plan, reason, and operate autonomously. So think AI robots or sophisticated virtual agents that can do complex tasks without a human pulling the strings.
And NVIDIA sees this as the next huge market.
They see it as the next multi-trillion-dollar application layer. They're positioning their hardware for that future, not just the current language model training cycle.
Finally, let's talk about the money, the sheer scale. If management thinks the full AI infrastructure market could be $3 to $4 trillion, how on earth does that get funded sustainably?
That is a very valid concern about the longevity of this spending cycle. Management clarified the funding mechanism.
How does it work?
So the initial investments, the ones driving the current hypergrowth from the hyperscalers, are largely cash flow funded.
Meaning the investments are paying for themselves pretty quickly. The ROI is there.
Exactly. But for that future $3 to $4 trillion market, the vast infrastructure needed for agentic AI management thinks this will be funded primarily by countries, industries, and large enterprises.
Building their own sovereign AI.
Exactly. Building their own sovereign AI infrastructure. Think of countries investing billions to keep their data processing capabilities domestic and secure, just like they fund defense or energy. It broadens the payer base way beyond just the cloud providers.
So when we put all this together, flawless execution, a clear roadmap, a defensible moat versus serious geopolitical risk and these high valuation concerns, what is the big picture takeaway for you?
I think the core conclusion is pretty unambiguous. NVIDIA is executing flawlessly against massive visible demand.
The numbers don't lie.
The Q3 earnings and Q4 guidance confirm the momentum is still accelerating. The wide moat built around CUDA and the strategic shift to selling these AI factories, it just reinforces their long-term dominance.
So despite the short-term noise,
Despite the short-term price volatility from real risks, like the China exposure, that $500 billion visibility from Blackwell and Rubin, and the trajectory toward this multi-trillion-dollar market, it suggests the long-term outlook remains overwhelmingly positive.
which brings us to our final thought for you to consider as you process this deep dive.
Go for it.
Given the aggressive, confirmed product roadmap with Rubin on track for 2026 and the immense confirmed CapEx commitments from hyperscalers set to hit $600 billion, will the continued acceleration toward physical AI, that multi-trillion-dollar agentic opportunity, create a sustainable growth engine that justifies its premium valuation and shrugs off geopolitical risk? Or is eventual market normalization simply inevitable?
Critical question of timing and market absorption.
It certainly is. Thank you for engaging with this deep dive into NVIDIA's complex story.
A pleasure.
If you found this discussion valuable and you want more impartial, in-depth analysis of the complex topics shaping our world, please take a moment right now to subscribe and hit that bell icon. Your support ensures we can continue producing these detailed analyses, and it guarantees you won't miss our next breakdown. We appreciate your engagement.